Today, SEC Chair Gary Gensler renews his push for crypto compliance in testimony before Congress. Franklin Templeton joins the rush of investment firms hoping to launch a spot Bitcoin ETF. And David Moore with CoinCover breaks down the blockchain protection company's new report outlining the barriers to crypto adoption. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are in rally mode on Tuesday, with Bitcoin jumping above $26,000 by noon Eastern. That's after dipping below the $25,000 mark briefly yesterday afternoon for the first time since June. Meanwhile, Ether climbed to $1,600 and Solana jumped to $18. Okay, let's talk about the top stories. Gary Gensler reiterated his critiques of crypto in a hearing before the Senate Banking Committee. In his Tuesday testimony, the SEC chair called out what he claims is wide-ranging non-compliance with securities laws. He also stressed his view that most crypto tokens are subject to existing securities laws. And for the rules that the SEC thinks do need updating for crypto, well, Gensler pointed to a proposed update to the agency's investment advisor custody rule, part of a law from 1940 that dictates rules for investment advisors. In February, the SEC proposed broadening out that rule to include more industries. And today, during his testimony before the Senate, Gensler pointed out that would include all crypto assets. Next, Franklin Templeton is jumping into the rush to launch a spot Bitcoin ETF. The investment firm filed a proposal with the SEC on Tuesday to bring the Franklin Bitcoin ETF shares fund to market. Of course, FT is joining a bunch of firms already trying to launch a spot Bitcoin ETF in the US. Grayscale's Michael Sonnenschein spoke with CNBC yesterday about the growing enthusiasm for the Grayscale Bitcoin Trust, especially after that court decision that the SEC was wrong to reject the proposal without proper explanation.
The market reaction, the investor reaction has been very, very positive. There's not only a lot of enthusiasm in the underlying Bitcoin market, but certainly seen a tremendous tick up in volumes in GBTC and interest, have seen the discount to net asset value continue to shrink since the decision came out. But all of us, Grayscale, our investors, the team as a whole, the community, waiting for this 45-day period.
In that testimony on Capitol Hill we just told you about, Chair Gensler said the agency was still reviewing the recent Grayscale court ruling and multiple applications for an ETF. Finally, we're learning more about how hackers took over Ethereum founder Vitalik Buterin's X account. Vitalik posted on decentralized social app Warpcast that hackers took advantage of a SIM swap. That's when an attacker contacts a mobile phone carrier, in this case T-Mobile, and convinces them to switch your phone number to a different SIM card. After gaining access to Vitalik's account, the hackers posted a malicious link that reportedly led to nearly $700,000 in losses from victims. All right, one of the biggest barriers for crypto adoption is theft, which includes hacks. So for our main story, Crypto World's Talia Kaplan spoke with David Moore, Chief Product Officer of CoinCover. The blockchain protection company recently released a comprehensive report outlining the factors preventing mass adoption. The research also reveals the, quote, key to crypto's future.
CoinCover surveyed 9 countries, including the US, Canada, Singapore, Australia, and Japan, asking about crypto. You released the report last week, and you note that the research points to a positive future for crypto. Here are some of the findings. Ownership of digital assets is on the rise, with 17% of those surveyed currently owning cryptocurrencies, and 30% saying they will likely invest in the next 12 months. Can you take us through some of the other data CoinCover found that suggests the industry will continue to grow in the coming months?
Certainly can. What I found as we analysed and scrutinised the data that supported this report, the application of sort of qualitative and quantitative investigation techniques really pointed out to some clear direction and themes that emerged. The first is that despite the fact that crypto's had a rather torrid time over its past 15 years of life, it's actually very resilient. And that to the fact that over 30% of the non-crypto users are looking to invest in the next 12 months. But there's some hygiene factors that I think the industry needs to stand up to and support, because the main concerns that we identified was volatility. Now, it's not for us to comment on volatility at the moment. The market is already putting schemes in place to address that. But there's concerns around theft and the security was the fundamental underlying opinion that the majority of both crypto and non-crypto users highlighted. And then the final point is that this is where we had a really interesting divergence between the two camps, the crypto and non-crypto users. Crypto users were really, really keen on ensuring that access protection, the fact that they did not lose access to assets stored on blockchain, was their third concern. And non-crypto didn't offer that. What non-crypto users were more concerned about was complexity of the products and services. It's a really interesting insight.
The report found that Bitcoin is the most popular cryptocurrency with 46% of those surveyed, followed by NFTs with 18% and then Ethereum with 17%. So no surprise that your research found that Bitcoin is the most popular cryptocurrency. But was there anything you uncovered through the research that really surprised you?
I think it was more of a validation of what we were starting to see emerge in the market. When we work with our partners and our customers, there was very little surprise, but for us, it was the validation that the opportunity is growing, but we have to address those challenges that the report was very clear on. You know, that concern around security and protecting those assets. As you would expect with a traditional finance set of products and services, consumers are looking for those same levels of certainty and guarantees that they expect elsewhere.
It's interesting to note that half of respondents are positive about their financial returns from crypto holdings, compared to 20% who are dissatisfied with their returns. You'd think that number would be higher, especially with everything that had transpired over the past year, all those scandals and bankruptcies and the impact on crypto prices. What do you make of that data point, that only 20% are not satisfied with their returns on their crypto investments?
I think that's an indicative of where the market maturity is at this moment in time. I think crypto brings with it a whole expectation around the opportunity. I think that what we're starting to see emerge from those non-crypto users versus crypto users is more of a stabilized return on their investments. So that's what we're starting to see as a driver for some of those early stage majority investors. They're expecting more appropriate returns for their investments. And that to me is clear from the report.
Expanding on that, one question the report tries to answer: if crypto is a good space to be invested in, overall, what did you determine through your research in that regard?
Yeah. I think crypto is becoming very rapidly part of the mainstream. We're seeing traditional finance organizations really investing heavily in the technology and the support in order to be able to offer crypto versions of traditional wealth and finance products. So we're expecting to see over the next 12 to 24 months much more of that adoption of those types of traditional finance products, but with crypto underpinning their growth.
You brought up what's preventing people from investing in the space. The report outlines certain barriers that you mentioned, including trust issues, criminal associations, and security hurdles. Can you elaborate on those? One point that stood out to me from the research is that crypto exchanges are the least trusted financial services provider among non-crypto users, with 30% saying they do not trust them at all.
I think that's a really interesting statistic. I think all crypto service providers need to step up their security, irrespective of whether they are, their exchanges. I think it's unfair on exchanges. They've received quite a lot of bad press in recent years, and that's in the public perception. That's why they are viewed to be probably the most risky. I think that the entire industry has to look at security and, as I said, bring those levels of protection to their consumers that you would expect from traditional finance.
As it pertains to threats, more than half of respondents are most concerned about fraud, followed by theft, which includes hacking. A little more than half of people who own crypto are satisfied with their provider's commitment to security. What does that show you?
I think that again, it's that expectation of ensuring that there's layers of security that we take for expectation when we're dealing with traditional finance. What the report informs us is that there are certain categories of individuals that have a risk appetite, which is natural. So for me, it's about being able to address all of those risk appetites across that broader geographic spread of users. And for me, that's where the industry needs to get to in order to be able to satisfy and to achieve the growth that we expect from crypto in the next 12 to 24 months.
Okay, that's all for Crypto World today, but we will be back again tomorrow, so we'll see you then.